Hello traders, welcome to my YouTube channel. My name is André Cardoso, I'm a global market analyst. I take a few moments to produce or to share this video with you in order to get you synced with the process, to identify the patterns inside the market and to try to take advantage from them. This is educational content. Thank you for being here and thank you for following, for those who are following my work for a long time already. So I believe you are already familiar with all, not all the strategy, but at least the concept of trading harmonic patterns and trying to identify them. So I'm here today to try to share with you some of the behaviors the market is producing or eventually will produce or will forge later as educational content only. So my objective here is not to provide or to share with you a specific position. Actually, after you start to master those Fibonacci ratios and those advanced pattern formations, it's equal to everyone. Those patterns are there for everyone. There's no different interpretations for the patterns. Actually, it's an educational content that will force your brain to get at least synced with the process and with those Fibonacci levels. And it's a process that we can repeat over and over again. So we can try to identify those behaviors inside the market because the market has proven ourselves previously that is capable to produce similar, or if not exactly the same price moments or behaviors, which will force those patterns. So this example, this is 10 years bonds, US bonds. So this is a 12 hours time frame chart. I was following, I believe I shared this double top formation on Twitter, I believe. I share also among some of my communities, and from here the market has started to fall. So obviously a double bottom is all invalidated with a broken neck. The market has forged this consolidation, this sideways process momentum right below the neck zone, and then started to fall and actually breaking the 200 moving average, approaching at that point. Below at 88% retracement, the price will complete the bullish bat pattern. Note that we are trading at this moment. The market is opening the second candle for this session. The market is opening below the previous one, but it's trading the default projection for the head and shoulder, not the head and shoulder, sorry, the double top. A double top, let's say a similar or a copy from the same distance from the tops to the neck, projected below the neck, and we are now facing that level. So we are now trading at least the default price projection for the pattern printed above, and a few points below at 88% retracement we have also one eventual bullish bat pattern formation. So we are trading, actually the market has printed a new low just a few points above the 88% retracement, and it's now opening below the close price of the previous candle, which can represent or which will suggest at least more bearish momentum, at least based on the open price at this moment for this candle. So this is 10 years bonds. Let's try to check other pairs. I will not cover those Ethereum and Bitcoin, so I will not cover those cryptos. This is Euro bonds, actually Euro bonds, and very similar price behavior here. So we are approaching one bearish territory. So this is the 78% retracement, also a default and potential reversal Fibonacci level. But the pattern, based on the price action, based on the Fibonacci ratios, this 113 extension, false breakout, extended at 168 extension or a 224 extension. So we have two levels to search for a potential reversal. One of them, it's at 168 extension. The market has fall from a few points below, okay, and then rally above into new highs above the previous one. So at this point we are approaching the 224 extension to complete this bearish shark pattern, 162. We are also approaching this bearish and eventual or potential resistance trend line that comes from above, covering those at least those most recent highs, the previous higher high, and the most recent structural resistance above the most recent price, at least for this moment. So this is our previous major resistance above, and we are approaching, or we are trading at this moment below that structured trend line. I'm not saying the price will go there. Eventually it will. It can also break this trend and trade higher. But in terms of Fibonacci ratios, in terms of and considering the advanced patterns for the most recent price action, we have here let's say a cluster zone or a box of interest between the 224 extension for the shark and the 88% retracement for one eventual bearish bat pattern at 88% retracement. So it's this blue one at 88% retracement. So let's say we have a box where I will not be surprised to see some reaction, and if so, we can see eventually we will see the market searching for the 38% retracement, which is the default Fibonacci level as a first target for the bat pattern. So this is Euro Bunds on this is a 12 hours time frame chart also. More. This is also 10 years futures, and I'm following this one for a long period of time, as you can see. But again, we are approaching also this structured trend line as potential resistance. The market is rejecting to trade above. Right above the most recent structure highs, the most recent highs, we have the bearish, this bearish bat pattern at 88% retracement. The market is now, this is a 12 hours time frame chart, and this is a delayed chart because I don't pay TradingView to offer me this into a live chart. But we are approaching the 88% retracement as the default bat pattern, bearish bat pattern formation completion point. From there, and again, we expect, at least if the market forms that pattern, if the market starts to react from there, I will expect a minimum 38% retracement, at least based on historical data. So we expect the bat pattern to trade a 30% retracement as a minimum expectation. But always we have, when we have a bat pattern, we have also other Fibonacci levels above where the market can search for that resistance, and in this case it needs to break or to violate this descending structure the market is forming and threatening at this moment. So if the market actually violates this structure, and if the market, let's say, if the market violates, or if the price violates its previous structure resistance above, we have the 113 extension right above for the default, for the default, for the alternate bat pattern at 113 extension. And again, if the bat fails you, just grab it. And it's a quote that I use that I usually use among my communities. So if the bat pattern fails you and you have the default bat pattern and the alt bat pattern completion points, if the bat pattern fails you, just scrap it, because the market tends to extend above. And if the market extends above, the first level we are searching for is the 161.8 extension, 122.26 is the price. This is also previous December 26. Let me, where is that support? Exactly, December 2016 actually, support level. So threatening these supports as potential resistance, I will not be surprised at all. Okay, but again, for that to happen, or at least for the probabilities to increase, to achieve those levels, we need to violate all that structure. And we have also a major descending structure trend line, which can be tested with this alt bat pattern at 113 extension, and a violation of that level usually will force the price to break that level, obviously above, and the 168 extension is the next level where I suggest people to pay attention. Synced with the 50% retracement from all that structure highs to this bottom. Well, let's wait and see. 10 years more. S&P, actually let's jump on DAX. DAX, I was expecting once I saw the breakout of this bearish structure, I was expecting a retest of the structure and then a rally above. The market has printed this cipher pattern at 78% retracement, 1, 2, 3 price swings followed by the 78% retracement, 1, 2, 3 at 127 extension, 78% retracement. The market has synced, retesting again this bearish or descending trend line. It was acting as a resistance previously, it's now acting as a support. It can build two things from here. One of them, obviously, it's a bounce, a strong bounce, retesting this major descending structure eventually, retesting this bearish descending structure, or even trading higher. At least that's still based on this technical double bottom is the expectation. We need to violate the neck in order to validate this as a technical double bottom, and the market can fail that criteria, which will invalidate the pattern as a potential price reversal behavior. So when we face a double bottom or a double top, once validated, we expect a reversal, at least considering the most recent price behavior, the price momentum. So at this point we are trading bullish. The market has printed double top, broken neck, support below the neck. Then the price, it has, for those who are familiar with, the market has developed the 26-18 trade setup. So the market has pushed into the golden ratio and then synced from there. At this point, the market is printing almost the same thing as above, so reversal. Obviously, this is a technical double bottom information. So we require at this point, it requires a broken neck. Once validated, we expect the same thing. We expect a resistance above, a push to the golden ratio, and new highs above that eventual high above the neck. So at least we require the broken neck. If the market will print a resistance here, I don't know. I'm just using the Fibonacci, the 38% retracement, as a reference for educational content, and as reference with and synced with the previous or close to the previous structure most recent, let's call it a minor support here. I will not be surprised to see that area acting as a resistance, a push to the golden ratio, and from there we can try. It will create a setup to trade DAX above. We can see that a symmetrical behavior from that, actually that structure, will put the price very close to the completion point for this bat pattern completion point. It's a symmetrical ABCD pattern, which again will put the price at this cluster zone between the 186, 88% retracement and a few points below the golden ratio at 618 retracement. So until there we need to wait to validate, search for your criteria, define your criteria, search for them, identify them, validate them, and then try to take advantage from them. Until there I will not buy the market or sell the market, because I have no setup to enter, at least based on my strategy. I don't have a motive to engage a market from these levels. Obviously, you are trading a bottom of a structure. We can try a bullish momentum, basically supported by a friendly risk-reward approach. Okay, I will try and to enter in a long position, trying to retest the 200 moving average. I will put my stops right below the double bottom or the eventual double bottom formation. If the market decides to trade below, I will lose. It's a very friendly situation to trade for those who are thinking on going long on DAX. So, but at this moment I have no criteria and no motives to engage this market, at least in my opinion. And I believe at least for me, I need to stay aside from this. The market has printed this cipher pattern, which actually I missed on DAX at 78% retracement. And for those who are or were searching for opportunities to sell the market, this was one great opportunity to try to at least the market has created a motive that allow us to attempt a short on DAX at this price. Stops above the completion point or the starting point for the pattern. Actually, let me draw the pattern here for those who are less familiar with those harmonics. So the market has developed or printed a cipher pattern at 78% retracement. Obviously the price has traded a few points above. That's why we need to respect the structure when trading harmonics. We need to respect the starting point for the pattern, stops right above that structure or a few points above that structure, because the market can actually print a new high and fall from there. But I suggest always to give some room for the price to breathe if necessary. So stops above the starting point, 78% retracement as the engagement point or engagement Fibonacci level, and we short the market. That was the motive to trade DAX on a short direction. And at this point we need to wait. What the market can develop now, and actually we need to validate that also. It's one eventual, and it's not so common. One eventual, let me try to change the color here into a dark. It can develop a kind of an head and shoulder formation. It's not usual to see those types of head and shoulder. It's a descending, let's call it a descending head and shoulder formation. So it's a right shoulder, the head, reinforcement of this bearish descending trend line acting as resistance. It's now a support. It's a neck zone, new eventually the price will push a few points above the highs of the left shoulder as reference to print the right shoulder. It can happen, so we can use the Fibonacci retracement tool. We can try to measure that left shoulder retracement in consideration to the most recent price behavior. So from the head to the neck zone, to the reinforcement of the neck zone, we try Fibonacci level, and we can identify the golden ratio synced with the highs of the left shoulder. So I will not be surprised to see a push to that level and then bearish momentum again. And obviously we are trading that, actually, as we can see, that 23% retracement from this bearish swing at this moment. So if the market decides to use that as a pressure zone, at a pressure level, I will not be surprised to see DAX inside this bearish trend, continuing trading lower, inside, giving sequence, let's say, giving sequence to this major bearish momentum. So at this point, heads and shoulder, we are trading one eventual neck zone, heads and shoulder under formation, which will break below, obviously, and the eventual neck breakout for this technical double bottom. So we need to wait to validate your criteria. So at this point, trading below the most recent support will validate, let's say, the heads and shoulder. Actually, the heads and shoulder will be validated a few points above, so the market needs to break these supports. If the market breaks this support, we'll trade lower, and we need to be aware that this heads and shoulder formation, besides the projection below the neck zone, the market can fail that projection. The market can break the neck, can find support at the previous structural lows, at previous major support, and the market can bounce from there, okay? And we need to be aware of that. So that's why at this point, I have no motive to sell this market, and I have no motives to buy that market also. If somehow you have a fundamental approach, and if you can reinforce your trade setups, or if you can reinforce your trading opinions or observations, if you can support that technical approach with some type of fundamental approach, it can be useful for some of you. If that allows you to engage the market in any direction based on that, so be it. But I have no fundamental approach. Actually, I don't turn on my TV for a while already, so the only news that I have is because I belong to one amazing community that allows me to get synced constantly with that fundamental approach, and well, always related to the person that makes the comment, obviously. But I don't support my trades based on the fundamental approaches. So it's pure 100% technical approach. So this is DAX on a 12 hours time frame chart, eventual edge and shoulder information above this descending trend line, after this bearish cipher pattern above. A breakout of this neck, I will wait for the golden ratio pullback. So I need the golden ratio pullback to create a 26-18 trade setup that will project the price with the symmetrical price action that will put the price a few points below the completion point for this eventual bearish bat pattern. But until then, we need to wait. I will not be surprised to see DAX trading lower. More S&P 500, which has been interesting, at least based on advanced pattern formation. So we are playing ciphers here at this point, and one eventual and very remote and eventual bullish Gartley pattern. I'm saying that because I will not be surprised to see S&P bouncing from this golden ratio. This is also previous structure support and resistance level. Okay, so the market has acted here, support, resistance, and well, that level has been reinforced a few times as support and as a pressure zone. So at this point we have 200 moving average making some pressure. Attention to that 200 moving average. This is a 4 hours time frame chart. But as you can see, the market has printed as reacts very well as soon as the market achieves or reaches some or specific Fibonacci levels. So the market has printed the cipher pattern, at least based on the previous swings and Fibonacci ratios. We expect the 78% retracement for this bullish cipher pattern. The market has extended a few points below, searching for the 88% retracement, and again, that's why we need to respect the previous structure and the starting point for that pattern. In this case, this is a cipher. The price has reached the first and the second target. Obviously, the market has extended above, has retested the previous structure resistance zone. So and based again on those Fibonacci levels and Fibonacci ratios and these three swings, we expected the 78% retracement to form the bearish cipher. And again, the market extended above the 88% retracement, not usual actually, and then retested the highs. And again, that's why we need to respect the structure. Stops above, respect the highs, entry at 78% retracement, and the market has synced. Now with the Fibonacci level adjusted at these highs, the market is trading at the second target. The market has, imagine a situation where you short the market at the 78% retracement. We have one initial first and second target positioned. The market has extended above. We adjust our Fibonacci level from our entry to the highs, and you adjust your second target. At this moment, the golden ratio is a second target for the pattern. Again, at this point, I can see S&P bouncing from this previous support. This is like, we can call it like a pivot zone, previous support and resistance price level or pressure zone. I can see S&P bouncing from here. And that's why I set this green box here. So this is a previous minor support here. And I'm not saying the price will go there. I don't care about that. Actually, I just need to wait. This is just one way to represent the idea why I can imagine a situation like this. And this is pure speculation. It makes no sense actually, and eventually it's not useful to trade the markets for the next hours or actually the next sessions. So we need to, based on these Fibonacci ratios, we need to wait and to validate criteria. So, but I can imagine a bounce from these levels, searching for this previous structure support. That will put the price at the golden ratio 27.67. So this is the golden ratio and the previous structure supports, which can act as a resistance. If the price bounces from this level, I can see that happening. I will not say the price will then sink from here, but based on the default price action or price behavior, and let's go into the forest at this point. Usually the market will break previous resistance, and it will retest and then go higher again, and then retest resistance again and go higher again, and then go and retest the previous structure. That's what we call in the trend market. On trend markets, usually the market acts like this. So the market will print a new high, retracement, will break the structure, and it will retest that structure eventually, and then starting to trade higher. Okay, so but this is the default, let's say the default price behavior or price action behavior. So we have a broken structure support. We have a new support below the previous one. I will not be surprised to retest that support. Obviously, this was a huge yesterday. This was a huge candle bearish momentum here, and actually it has set the price below the 200 moving average. So, but again, I will not be surprised, and because I have no setup to trade at this point with S&P, very similar with DAX, I can imagine S&P retesting previous structure support and new fall from there. And if the market decides to break this structure support, the most recent one, the golden ratio, we have the 127 extension, and that is the level for to search for bullish momentum. So at this point, I can expect the market to respect this structure, this eventual ascending structure. The market will print, let's say, the Gartley pattern at 127 extension. It requires a double golden ratio as support and resistance levels, and it needs to be followed by. It requires the 127 extension from the first swing. So we extend this first swing below to search for the 127 extension, and that will put the price at 26.63. So from here we expect the market to bounce. Obviously we have the price, the trend line, the eventual trend line structure. We can see a bounce from this level, and note, because at this point, after this period of consolidation of S&P moving sideways, I will not be surprised to see this Gartley pattern act as a catapult to finish this corrective structure, to finish this momentum, and to trade higher, or at least to search for new highs above the most recent ones. I will not be surprised with that. The same way, we need to be prepared for eventual breakout of the structure, and again, that's why we need to respect the structure when we trade those harmonics. So we buy the market, we need to respect the structure. If the price violates this structure, it will invalidate the pattern, the momentum, and it will decrease the probabilities for the price to bounce from this level, and will increase the probabilities to trade even lower. So the market will break this structure. It will find the support eventually right below the next zone. That's where everyone will start to buy again. Eventually the market will retest that trend line as resistance, and will keep trading lower. That's not what I'm expecting from S&P at this moment, but we need to be prepared and what to do if the market decides to go against me. So at this point, I will buy this Gartley pattern. If the market decides to offer me that opportunity, I need that opportunity to create a friendly risk-reward engagement for S&P. So if I want to trade S&P into new highs, if I have that expectation, I need to create a friendly risk-reward opportunity to engage the market in that direction. So I will wait for this Gartley pattern to buy that market. If the market decides to offer me that pattern, if the market decides to trade higher without printing that pattern, I will search for another opportunity later, and I will try to take advantage from that opportunity to engage in that direction if necessary. But I need to search for a good or a decent opportunity, at least based on this most recent price action or most recent behaviors. And that's why I trade based on those patterns. I created, at this moment I have, as an example and as educational content, I had these 3 examples of 3 different motives to engage the market. One, a bullish one, a bearish one, and we have now one eventual that will take longer to complete, one eventual bullish setup to trade S&P. So stay tuned for the next sessions. Let's check, let's follow German DAX. So we have also oil, which has broken the descending, that huge channel from above. So this bearish momentum has been broken and retested, and we are now trading above that structure. I will not be surprised to see a bounce from this area, but at this precise moment, and when I was expecting, and I will jump into a 2 hours time frame chart. 2 hours time frame chart, I can see here the head and shoulder under formation. So what we have actually, let me try to get it synced. What we have here is a technical double bottom, validated already with a broken neck and with resistance printed at the 200 moving average. I was expecting from these highs, let me change this color, I was expecting the golden ratio pullback from that high, from this highs. I was expecting the golden ratio pullback to buy the market. It's the 2618. Okay, copy paste, project the price from the golden ratio, and you have your default price projection for the 2618 trade setup. The double bottom validated with the broken neck, resistance above the neck, and I was expecting the golden ratio pullback. The market has failed that expectation. It has retested the neck. Okay, broken structure, new resistance, pullback, retesting that previous structure resistance is now a support level, reinforced again. So support, new high, new Fibonacci adjustments. What we have now, and until it breaks the structure, is a game of patience. So the market has printed a new high above the previous one, it has pulled back, and we have again another golden ratio on hold, so another 2618, so set up. And let's recap all that story. So all that motive, so we have a neck zone, we have the first bottom, retested, closed above, and I will put this small line here as a reference. So the market has closed above the previous close price, and this is a requirement, so I need the second bottom to close above the close price. I can see the market trading even lower, but I need the market to close above it. Okay, it's a very sorry, it's a very strong signal of rejection. So, and if the market then later breaks the neck zone, well, it's a bullish momentum. It's a bullish price reversal at this point. What we have now is one eventual head and shoulder And let me try to project this pattern based on the most recent structure support level. So projecting that, projecting the price below that next zone, that will put the price retesting the double bottom. Okay, which is not what I am expecting at this point. I was not expecting a deeper pullback to those levels. I can expect the golden ratio to act as eventual support level, but it's a few points above that default projection. So we can let's try to see what we can expect from oil at this point. Let's use a Fibonacci retracement from the tops to the most recent structure support. We are now approaching the 50% retracement. Actually, the price has been rejected by the 50% retracement pullback, and it's now trading again at that level. The golden ratio, it's positioned at the highs of the left shoulder. So actually we are already trading at that structure. So but the golden ratio will put the price at the highs of this left shoulder formation as a reference, and we have limits to form the left shoulder, actually sorry, the right shoulder. We have limits to form that right shoulder at the 78% retracement by the books. So this is the limits, the limit level, the extreme level to form the right shoulder. So I can see the breakout of that area, the 78% retracement, and from there I can project another symmetrical price behavior. And obviously I'm using this level as educational and to share with you some of the limits for the market, but I can use the golden ratio and the highs of the left shoulder as I like to use to project the price below. So this will be a three-wave structure or corrective structure that will put the price very, very close to the golden ratio, and it will print another bullish 26-18 trade setup at this point. And again, we will project the default price behavior on oil, golden ratio, pullback, copy the previous swing, extend it from the golden ratio. So will the market print this pullback? I don't know, but if the market prints me and it offers me that opportunity, for sure I will trade it. I will try my engagement there based on previous historical data and based on this specific trade setup. Double bottom validated with a broken neck, resistance above the neck, pushback or pullback into the golden ratio, ABCD pattern above. Actually, what we will have later, it's something in a larger scale, and the scale we never know which will be used. The market can print, the market can take longer to print that behavior, but let's use using a symmetrical behavior between time and price length, or price range, sorry, we can use a default ABCD pattern, and that will put the price at 56 or 56,500, so or close to that level. Obviously at this point we can use also the default 127 extension from this bottom to the most recent structure resistance, and we can search for the 127 extension, which is positioned somewhere here, which is positioned somewhere at this point at 56, so 15, a few points below 114 extension So we have a default ABCD pattern projection at those levels. So I will not be surprised to see oil trading lower, searching for new buyers below this head and shoulder under formation. I will not, I'm not interested to sell this eventual head and shoulder. It's an opportunity as any other. It can offer us some interesting profits, but at this point I'm interested to search for opportunities to buy this market and not to sell it. Okay. And the market can print that opportunity below these lows, okay, and I will miss, but I will not, that means that I will not engage the market until there. So if the market decides to print new lows, I need to wait and to validate my criteria over once the price approaches my targets or the completion points for the patterns that I have below. Actually, on a daily time frame, we have patterns waiting on hold below this previous structure, this major support. But until there, I have nothing. And actually, at this moment, what we have is an head and shoulder above the next zone, which is a controversial price behavior. So double top, actually a double bottom as potential reversal at the bottom, and the head and shoulder followed by the head and shoulder above the neck. So what we will do? No, at this point I can see this head and shoulder failing, and the price keep trading higher. But who am I to forecast or to imagine a thing like that? I need to wait and to validate those criteria and to wait for those definitions inside price action. So let's jump into another one. So this is West Texas oil. Let's jump into silver, which has been actually interesting also. I need to go into a higher time frame. So silver has printed a shark pattern at 168 extension. So I have that pattern. It's not here. It's not printed here, but let me try to false breakout, 127 extension, 200 moving average, and the price has started to pull back. So the market has already reached some targets or default targets for that pattern. So the market is trading the 38% retracement. It's rejecting the 38% retracement, which means, which can suggest more bullish momentum. If the price rejects the 38% retracement, the first Fibonacci level for eventual support level, it's a sign for strong bullish momentum continuation. So at this point I can expect a bounce from this level and new highs on silver. This is a 12 hours time frame chart, and if that happens, we have just a few points below, we have this Gartley pattern at 127 extension that will search also for the 38% retracement. So what I'm saying is I will not be surprised to see silver trading just a few points above, searching for the 38% retracement, and then eventually from there again new highs. But the pattern will get completed at 127 extension, and usually by default it will search for the 38% retracement, which can be extended to lower territory, to lower prices at the golden ratio. Okay, so at this point we have this shark pattern that usually will offer you also the 50% retracement bounce. So the market is now facing the 38% retracement. Okay, usually, and why I'm saying this, because the shark pattern, it's also gives sequence to the 5-0 pattern. Okay, what we have here if is the 5-0 pattern sequence. So we have the false breakout extended at 168 extension. We expect something like the 50% retracement, and that will print the 5-0 pattern. Usually inside we can try to search for a parallel between that structure. So at 50% retracement, again, it's a default Fibonacci level for the shark pattern. I'm not saying it will happen. Actually, if I put here the shark pattern this way, you can see between this parallel or this eventual parallel at 50% retracement, this is the shark that gives sequence to the 5-0 pattern, which will offer you another opportunity to buy the market. So the same way with a double top, with a double bottom, we expect a resistance above the neck and the pullback to the golden ratio to create a 2618. The same way for the shark. The shark, it's a false breakout extended at 168 extension, and then the 50% retracement will offer you the 5-0 sequence. Okay, sometimes the market will not offer you that retracement, and if that happens, it suggests more bullish and strength momentum and bullish continuation for that instrument in particular. In this case we are talking about silver. So at this point I can imagine silver trading higher, and we should, at least in my opinion, we should search for opportunities to buy that market and not to sell. Why I'm showing you those patterns here? Because those may act as pressure zones. At least if you want to buy the market, I don't suggest to buy here. Okay, if you want to buy the market, I don't suggest to buy here, because those are the completion points for specific advanced pattern formations, which usually tends to push back from those levels. And I can imagine a situation like this trading, retesting this previous structure. And let's measure, because we will search. This is a shark. Actually, this is a crab pattern, not a shark pattern. It's a crab pattern extended at 168 extension. So, and if that happens, we will search for targets between the 38, the 50%, and the golden ratio at 618 retracement. So at this point, I will not be surprised, as you can see, to see silver violating all this structure without filling those patterns. The market can fill those patterns eventually and trade higher later. Okay, the market can fill that Gartley, can retrace to the 38% retracement and bounce from there, and from there it will complete the crab pattern. Okay, and the 38% retracement is synced with this previous structure resistance level, as we can see. So it's a natural process: extend, retrace, retest, and bounce again. Okay, from there we can expect, or we can start to make some assumptions. So from there we can start to project the price even higher, or at least as a minimum expectation, the market should retest the highs or trade the fibs, searching for something between the 618 retracement and fibs above. Obviously, I will not ignore the 50% retracement there. But at this point, I will not be surprised with a situation like crab pattern, 168 extension, retrace to retest the previous structure resistance, and the bounce, retesting the highs or using the fibs, as pressure levels. And from there we will wait, because the same way the market is acting now is using this 38% retracement as potential support. Nothing assures the market will not use again later. If that happens, if all that scenario happens, nothing assures that the market will not use that 38% retracement as a resistance. And if that happens, we start to project the price even lower. Okay, but until there, a lot of price action required, so a lot of criteria need to be validated. Broken resistance levels, 200 moving average actually now as potential resistance level. We have this Gartley pattern which can be used as pressure zone also, and force the price to retrace or to pull back a few points and then again extended above. So this is gold, this is silver in a 12 hours time frame chart, very similar with at least in momentum. With silver we have obviously gold also approaching very similar criteria here, the crab pattern at 168 extension, but with one edge or inverted edge and shoulder, which can be actually with the default projections a few points below the completion point for the pattern. So I will not be surprised that this is the broken neck. This is, let's say, a descending neck structure as resistance broken. I will not be surprised, and again, I'm not saying the price will rally or the price will go down. I will not be surprised to see retests and then a decision what to do. No, retest the structure and again new highs on gold. We never know what the price will print next. I don't trade based on those expectations. I know for sure what to do if the market decides to print that pattern above. Okay, and obviously breaking this structure below this this descending structure again will increase the probability to trade even lower. We have also this 200 moving average below, and retesting that media will not also surprise me. So until there we need to wait, validate your criteria, nothing to do unless you are trading breakouts, which I suggest to wait for a deeper pullback in order to try a better or a friendly risk reward situation, because you need to respect those fractals to position your stop loss if you want to buy gold. I'm also not saying to sell them. I'm not saying to sell the markets here. I'm just showing you potential pressure zones, which usually can produce some interesting price behaviors. I'm not saying, okay, if the price reaches 1263, I will sell the market strongly. No, I'm saying the market will print a crab at that level. I don't know if the price will respect that crab pattern, if the price will trade accordingly to the forged pattern, but that's where I identify the next advanced pattern synced with this previous structure resistance level. It's a minor resistance above, which may or may not have some impact, and it's also the 50% retracement from all these bearish momentum, from these highs to these lows. This is the 50% retracement. We are now threatening the 38% retracement. Okay, and well, that said, this is the level where I can identify as the next potential resistance or pressure zone on gold. Now let's talk about Dixie. Dollar index threatening all these ascending structure. Again, we never know what the price will print later. We are trading. I need to increase my time frame to show you this pattern into a 2 days time frame eventually. A lot of noise here for those who are not so familiar with those advanced patterns. So let's start from the left to the right, from the left side of this chart to the right side, and there are eventually I have, some of you are already familiar with those patterns because I shared them among the community, and at this point the market has printed this head and shoulder formation followed by this crab at 1618 extension. It's another crab very similar to the ones that I'm expecting on gold and silver, the bearish ones. This was a bullish one, followed by a double bottom, and followed by validated with a broken neck, and followed by the golden ratio pullback. So this is also the 2618 trade setup, okay? And that said, a bullish opportunity to trade the markets, which has extended to the 261 extension from the double bottom, from this bottom, these lows, to the resistance above the bottom, above the neck, extended above. So we are at this point, the market has started to pull back to from the 261 extension, and it has completed later the alternate bat pattern at 113 extension. So, and we're still trading inside that zone, that price level, okay? That said, I will not just because the pattern itself, okay, not just because of this pattern, because this pattern has already produced some interesting price behavior here, but I can see this as the last high on dollar index if the price, and obviously I need validations, I need the price to break this structure below, to trade below it. Actually, I need, in order to increase those probabilities, we need the price to reject again this 50% retracement. So this is the 50% retracement from all these highs to the bottom. This is the 50% retracement. The golden ratio is just a few points above, and the 78% retracement. So for you to take an idea, this is a Fibonacci from January 2017 to this bottom February 2018, okay? This is Fibonacci retracement from all that structure, and we are now threatening the 50% retracement. Actually, we are now trading between the golden ratio and the 50% retracement. So at this point, I have obviously there are only two options to trade lower or higher, but at this point we have this bullish or ascending trend line supporting the price as support, and it requires a breakout of that structure to increase probabilities to trade lower. If I can imagine dollar trading at those levels, yes, I can, because at this point, if the market breaks these levels, it will need a support below, and a support below synced with the previous structure support. I will not be surprised. The 38% retracement also positioned at that level, the 38% retracement from all this bullish momentum, 38% retracement at this point. This is also the 161 extension from these lower degree or minor shark patterns at blue. So the 161 extension and a few points below, actually approaching the 50% retracement, we have another bullish territory for the shark. So if the shark fails me at the 161 extension, eventually it will extend a few points below, and the 224 extension is the limits to create for another shark pattern. Actually, it's the same one, but failed at 161 extension. It's based on the same criteria, based on the same momentum, but one of them will act at will respect previous structure supports, and the other one will not. And again, the shark pattern tends to offer you the 5-0, give sequence to the 5-0 pattern, and at this point I can see the creation or the formation of this shark pattern at 224 extension, which will offer you later a new opportunity to sell the market with the 5-0 sequence. Okay, we can use default projections, and obviously the 50% retracement. If you look left into the price action, we have the golden ratio positioned at exactly at this previous structure support and minor resistance level. So I will not be surprised to see, instead of the 50% retracement, using that confluence between these major 50% retracement with the golden ratio, and then project the pattern, project the price below. Minimum expectations for the 5-0 pattern retest the previous structure bottom. Okay, the market will print the shark pattern. Okay, shark pattern, retracement, previous structure resistance and support levels, retest the bottom again. But again, we need criteria, we need to wait, we need patience to trade the markets. Okay. That said, at this point, we need to wait a breakout of this structure. For those who are trading breakouts, I believe you have already your setup or your motive at least prepared. Okay, at least you have your setups already aligned with the price. So we need to wait for the price to create those motives to engage the market if you trade those breakouts. At least for me, I have no motive. Again, very similar to a lot of other instruments, I have no motive to participate at this point in those markets. Beside this bearish bat pattern or alt bat pattern at 113 extension, which can be useful again. So if the market decides to break these levels, we can try to create here something to engage the market. But until then, we need to wait. And above, obviously, because the market can fail those forecasters and imaginations, no, those pictures and those patterns. They are very, very interesting, but only if they are forged. So I can spend one entire day talking with you about eventual behaviors that will never happen. So, and let's say a lot of times the market will not print the pattern that you are expecting. So, but if the market fails you, and again, following that thought or giving sequence to that thought, if the market fails my initial forecasts, above we have another bearish territory, a new high above the most recent ones at 168 extension, which will print another crab pattern at those levels, 98, 91 or 98, actually $99 will print the crab, the bearish crab pattern. Okay, but stay tuned and let's wait and see. Cable versus New Zealand sinking, and we have today a bullish session, but as we can see, I shared this bearish pattern above among my communities, a nice short opportunity. I was expecting somehow a false breakout at those levels using this 113 extension for a potential bounce. The market has completely ignored that level, and that's fine, because it's not a trade setup. Not just because I was expecting a false breakout at these levels, I will not buy the market, because I have no motive to buy the market there. We have a motive now at 224 extension, well, we never know if the market will respect that or at least those expectations. Let me just cross this, put this at this side. We never know if the market will respect those patterns or not, but it's printed. So we have the 224 extension. It's a shark pattern. The market has started to react from there, the same way the market has reacted to from the 200% extension. And the reason why I'm using here the 200% extension, because it's the default 5-0 sequence based on this extension. So the market has extended above at 141 extension, and the market has broken. So at this point we were expecting the 78% retracement to form one eventual cipher pattern. Okay, we expect the 78% retracement to forge the cipher. The market has printed a very interesting daily bullish momentum there from the 78% retracement, also the 200 moving average here. So that was the pattern we were expecting, and then the market has failed completely, breaking the 88% retracement, breaking the previous structure support, printing support below, and then now a 224 extension. So, but the 200% extension is the default by manuals. It's actually one of the primary Fibonacci levels to complete the 5-0 sequence. But it's not the level that I use, because usually the market will print a new low below that structure, which may or may not, but usually which may reproduce or produce a more, let's say, more interesting price behavior. But the market has failed this as a false breakout, extended a few points below to complete this bullish pattern, and that said, we don't need any of those Fibonacci levels here, just noise, including these ones that require some adjustments. So I can clear all those fibs there. So at this point I can see the shark pattern, as always, by default will search for the Fibonacci levels. By manuals, the shark will search for the 50% retracement, pointing to that moving average at this point. So obviously during that process the media will change its position. So we can use previous structure support, synced with the 38% retracement, as a minimum expectation for for pound versus New Zealand for the next trading weeks. Eventually, nothing is granted. The market can violate and trade below this area, below this structure support. At this point, we are breaking this descending, or at least the most recent one. This descending structure has been violated at this point, so the price is now breaking that structure, but nothing is certain, so nothing assures that the market will not just retest previous structure support, its resistance, and print new low from there. Okay, keep bearish, keep trending bearish. Nothing assures that, but the pattern is printed that usually will trade or will search for something as a 38 or a 50% retracement. Again, we can use the previous swing and you can see a 5-0 sequence again. Okay, 5-0 sequence again. Obviously the market has extended below, we need to project the price from those levels, but at this point I will not be surprised to see a similar momentum as the one that has forged the new higher high above the previous one, and a swing similar to this one will put the price retesting the structure support, retesting the 38% retracements, which I will not be at all surprised for cable versus New Zealand. More pound versus Aussie or pound versus Australian dollar. Let me try. So what we have here, the great gap at the 1618 extension. The market extended a few points below, filled the gap, and it's now again recovering and approaching this descending structure trend line. The market needs to violate that structure. At this point, we can use, I was expecting, obviously, as soon as the market starts to violate this 1618 extension, the market is open with this gap. And I was expecting, okay, eventually the market will print me the 224 extension shark pattern. So between my expectations and the 1618 extension, the market started to pull back, and again, retesting this structure, I can imagine acting as a resistance again, new lows. I will not be surprised to see this golden ratio being tested synced with the 224 extension. This is the 618 retracement from this bullish, from all this bullish momentum, as we can see here. So from these lows to these highs, the market is approaching, actually there's a sharp pattern at 224 extension synced or close to that Fibonacci level, so I will not be surprised with a new low retesting that structure, but we are also facing previous structure support levels. So bouncing from here, actually I will not be surprised also seeing that again the pattern will complete at this point, at this level, but a bounce and a breakout of this structure will force the price to eventually to break above. We can use also another extension and try to identify the 1618 extension from this last swing that will put the price above the golden ratio retracement. Well, I will not be surprised with something like another sharp pattern at 1618 extension or close to those levels, but until there, again, we need to wait. This is a daily time frame chart. We need to wait for the next sessions and the price behavior to identify those behaviors, and well, let's see what will happen from here. Euro versus New Zealand. As you can see here, the market has failed both of the levels to form the shark pattern. The 1618 extension and the 224 extension completely failed. The market has retested these previous structure support levels, and it has broken completely these levels again, so suggesting more bearish trend continuation. So at this point I have no criterias and I have no motives to participate in this price behavior on Euro versus New Zealand. I have no interest to participate on this at these levels. I need something more. I need some more swings from here to try to identify the next advanced or eventual advanced pattern formation. Euro versus Aussie. Euro versus Aussie is very similar situation as the pound versus Aussie. Also, the same gap here at the completion point for this alt bat pattern. The market is reacting well today. The market is also violating this or approaching. Actually, it's not validated yet, considering those close prices of those candles. The market is approaching that structure, which can break and search for. Let's adjust this Fibonacci retracement level, which can retest this 38% retracement, previous structure resistance. But again, let's use again the Fibonacci extension to search for this 1618 extension, which was positioned a few points below previously, And again, we have the potential for one eventual shark at 1/600 extension, previous structure support, golden ratio. So those who are trading breakouts, obviously they will wait for the breakout of this bearish momentum, they will wait for a pullback to try to go long. At this point, I have identified the next eventual pressure zone between the golden ratio and the 1/600 extension. So if I start to project the price from those levels, I will not be surprised to see a big fall on Euro versus Aussie from those levels. Minimum expectations, retesting the lows, the most recent structure support, and eventually trading even lower. Okay. More, but again, we need to wait to validate the criteria. At this point, we have this alt-bat pattern at 113 extension reacting. Okay, there's some reaction from those levels. The market has searched for the 88% retracement from all this bullish momentum. 88% retracement. It has acted as a support level, and the market is now trading higher. So breaking these levels, I imagine I can start to make some assumptions. The market will trade a few points higher from there. If the market will print that pattern here, I don't know, but if it's an interesting area to search for sell opportunities. Golden ratio 1/600 extension and previous structure support. I believe it will create at least a decent, friendly risk-reward approach to trade the markets. Okay. More, the next one, Euro versus pound. It's also a very annoying one, this one, because it is taking long time to decide. So market starts to move sideways for a long periods of time. It's annoying to participate on those markets, but sometimes if you are engaged, if you are already inside these markets, you need to wait just for your criteria to be filled or for your patterns to be invalidated. So at this point we have this cup and handle formation. So the market has bounced from the 38% retracement, and again, based on the structure, we can see the market is violating now these closes, the previous closes prices. So 200 moving average again acting as support. This is a 12 hours time frame chart. Again, I will not be surprised to see a descending structure continuing to rise or continuing to push the price above. Actually, we can use those structure lows, and we can see kind of a parallel channel. But we can see the price trading higher, but this is the cup and handle formation, which requires also this level to break. So we need the price trading and closing above these levels in order to increase probabilities to trade even higher. The default projection for the pattern will put the price at 92.76, a few points above, as we can see. And using a Fibonacci, if you use a Fibonacci tool or a Fibonacci retracement, you will see a retest of those 78 or 88% retracement, eventually 78% retracement from these swings from the previous high to the most recent bottom. 78-88% retracement, so the market will retest that area. And again, once again and always, we need to wait for those patterns to validate in order to increase the probabilities to to do what we expect those patterns to do accordingly. So it's a bullish cup and handle formation, so we expect the price to trade higher, but for that we need to see the price trading higher, and eventually the price will retest this cup and handle formation, which will produce your bullish opportunity to buy the market. Okay, stops below the handle and you jump on inside the market at the retest. We need a retest of the cup and handle next zone, or the cup and handle resistance in this case. Euro versus GBP. CAD versus yen. I believe I have something here, I'm not sure, but I believe so. We have this major edge and shoulder formation, where the price is now bouncing from previous structure support levels again. This is a daily time frame chart. Below this left and right shoulder, below this head and shoulder formation, we have this bullish butterfly pattern, and the butterfly pattern will trade the 38% retracement, previous structure support, actually the zone we are now forging. So the market is now printing or reinforcing this support zone, and if the market breaks this level, it will print the butterfly at 127 extension. If the price prints that butterfly at 127 extension, 82.25, I can see the price bouncing and searching for a minimum 38% retracement at this point, at this stage. Okay, so more CAD versus yen, New Zealand versus yen also. It has completed a perfect shark. Let's jump into a 4 hours time frame. As we can see, the market has filled the criteria and the Fibonacci ratios for the shark pattern at 224 extension. The market is already, let's adjust this Fibonacci here. Sorry. The market is already trading, or very close, at least, very close to the 38% retracement. Failed to print that support there. So I will not be surprised to see this shark pattern, which is already working fine. I will not be surprised to see the price to fill those default criteria. The shark usually will produce or will give sequence to the 5-0 pattern usually, and that will depend on the market conditions and the market circumstances. But usually when we face, and again, because I'm repeating myself, I believe, but usually the shark pattern will produce a 50% retracement, which will give sequence to the 5-0 pattern. Minimum expectations, retesting the highs, or using the fibs to find or to forge the next resistance level. Okay. And the market can print me a pattern here. I can see something just looking into this chart at this point without using any other Fibonacci tools. I can see this as one eventual cipher pattern that will depend on this extension below. But if the market extends below, and then if the market retraces to the 78% retracement, it will print the cipher pattern, very similar to the one that I show you on S&P 500. And we have the cipher pattern at 78% retracement. Again, until there you need to wait to validate criteria and wait for the price to develop and to form your pattern. Until there, take some fresh air, or stay or sit above your hand and watch the price action and learn with the price. For those who are learning, obviously. and I'm sorry for those who are more experienced. I don't want to send you again into to the school, but and we are always learning inside the markets. If you are not trading, if you are watching the markets, if you sit above your hands, sometimes it's the best thing that we do, sit above our hands, not trading at all, just looking into our charts. And that said, well, this is what I see on New Zealand versus yen. I can see a retest of these previous structures, price support levels or minor support levels here, previous structure resistance and support level at 50% retracement. So the default criteria requires the 50% retracement. So let's wait and see. Again, I will not be surprised to see the formation of different, I will not be surprised with the formation of eventual bearish scenarios above before reaching those default targets. We never know what the market will produce, but stay tuned with the possibility for the market to bounce from these levels, retesting the highs, eventually printing the new bat pattern at 88% retracement. I'm putting that the price there, but I don't know if it's there. But 88% retracement there, printing the bat pattern. No one assures that is a possibility or not, but stay tuned with those possibilities. At this moment, we have the shark printed and approaching targets. Nothing more to report at this situation. Aussie versus yen, also another bearish, a bearish setup. This one acting very, very well at 1/600 extension. Also the shark pattern, it's now trading. Let's measure where the price is now, approaching the golden ratio, the 68.8% retracement, so a few points below the 50% retracement. Again, don't get caught and surprised with eventual pullbacks. Okay, 5-0 sequence in action, a bounce from these levels, retesting the highs, trading the fibs. Something may happen from those levels. I'm not saying it will, but the probability after the development of a 5-0, the probabilities for a pullback, for a relief, it has increased obviously. Pound versus yen, abandoning the previous ascending structure and eventually to retest that structure. Okay, I can see a retest of this structure and then bearish trend continuation on pound versus yen. I have a major picture for this instrument, which requires let's say a daily time frame approach, and it will take time to develop, to form, and to validate, and then we need to check the market conditions once printed. But I can see the formation of this. It's a default bat pattern. It's a simple bat pattern, but we need to break this structure support. If the price violates its previous support, I can see the formation of this bat pattern a reality, but until there I have nothing to trade unless for those who are trading breakouts, the market is now breaking the structure, retest that structure in a new high, a new low, it's a probability also, broken structure, retest, trade lower. It's also a possibility for those who trade breakouts. We are also breaking all these bullish momentum, obviously, so the market keeps trading below that actually the market is now retesting that virtual ascending trend line as previous structure support. We are now retesting that area, which can force the price to reject. If that rejects the price will fall for sure. If the price resumes above this structure, there's also probability to search for levels above, and if that happens again, we need to push our Fibonacci extension tool, because this will act as a false breakout from the previous structure support, and we have an extension above to the 161. We search for the 161 extension above. So at this point we have two levels. If the price bounces from here, we have two levels where I can identify the next potential resistance or pressure zones. One of them at 161 extension, positioned at 144,980, and this one and this same sharp pattern can extend to the 224 extension, breaking these most recent structure highs, and again just a new high above those highs will print this sharp pattern at 161 extension, which tends to search for again for the 50% retracement. At this point, nothing of this is a reality. At this point, it makes no sense to discuss that possibility. But if the market rejects to break those levels below, I can imagine an extension, so a momentum, a bullish momentum, breaking resistance, searching for the 200 moving average approaching from below on a daily time frame, and eventually to form the shark between the 161 or the 224 extension. That will depend the strength of the momentum, the decisions that we made at those price levels, between that range, let's say. So cable or pound versus yen, euro versus yen. I'm holding a buy setup. I'm holding my bullish trade. It's also a 2618 trade setup, so it's based on and supported by this double bottom, resistance above the bottom, resistance above the neck, and a pushback to the golden ratio. So this is the daily time frame, and I'm holding my position from the golden ratio. So I entered the market at the 618 extension, 618 retracement, and I assume at least with a minimum expectation to retest this level. At least to retest this level, it's my expectation. But well, let's wait and see. Nothing is granted. At least for now, we need to break this triangle shape, or this consolidation period, which has taken so long during all these sessions, moving sideways, so annoying. And when I was expecting a breakout, and immediately breakout above, the market decides to give sequence to this sideways boring process. But well, the pattern is there. There's nothing more to do. Just wait for your targets, or wait for your limits to be hit as stop losses, and that's what we need to do. Identify the pattern. If you have a motive to trade the pattern, and nothing will change from the beginning. So you will lose the same amount of money that when I was engaging the market. Nothing has changed. The pattern is untouchable unless it invalidates. So I need an invalidation point, or I need my targets to be achieved. Dollar versus yen. Well, for the yen, it's a similar situation as many others. So we have a few advanced patterns projected below and printed already. So already actually on trading at targets between a daily time frame and a 4 hours time frame. The market has developed this bearish bad pattern at 88% retracement. Actually, the market has nailed the Fibonacci level to the completion point, and it's synced it below the golden ratio, and it's now and it has developed another bearish bad pattern at 88% retracement again and again reacted very well. At this point, and I need to decrease into a 2 hours time frame chart, I can see dollar versus yen bouncing from these levels. Eventually they will search for the 200 moving average approaching from above, 160-180 extension, again 5-0 sequence, which can produce a bounce or a relief from there and a new long opportunity or not. That will depend. It can use this level to print new lows, and that is my expectation based on the most recent price action, bearish trend continuation in this strong and huge sideways process. At some point the market needs to violate this structure, or above or below. I expect the price to break below, based on the most recent price action and the trend itself. So I believe there's room to see dollar versus yen trading even lower. If the market will complete that pattern, I don't know. That let's wait and see. Its previous structure support, it will turn into a resistance. It's a natural process. Eventually the market will print you that opportunity there in a 2 hours time frame chart, 1 hour time frame chart. On a daily, I have a major picture for dollar versus yen, so I can expect. I'm waiting for the 38% retracement is my minimum expectation to see dollar versus yen, 110, 780. So this is my level. For, let's say, for targets from this area. So we have a bearish pattern printed above, which tends to search for a 38% retracement from all this bullish momentum. So I will not be surprised to see dollar versus yen falling into these levels. Obviously there's always a probability to trade and to break this bearish trend line above, and trading above that line or trading above that price level should force the price to trade higher. And we have this channel, ascending channel, which a new high, retesting the top of that channel will not surprise me at all. So at this moment I still believe there's room and momentum to trade lower, 200 moving average approaching from above, retesting or searching for that moving average is not impossible, and that's what I'm expecting as a minimum expectation. Retest that moving average. If that will happen at the 38% retracement as I expect, I don't know. That is my minimum expectation for dollar versus yen. More dollar versus yen, dollar versus Mexican peso. I'll actually another very interesting, at least I was expecting, the creation or the formation of the bat pattern. I've deleted that pattern. Let me draw it again. So it requires the 88% retracement. So the market has nailed the 50% retracement here. So we have our first swing and our first retracement. 50% retracement followed by a retest of the previous structure bottom. Okay. Closing above, and it requires the 88% retracement Fibonacci level to print the bat pattern. Okay, from there, and since we have already identified the previous swing, we don't need those Fibonacci levels. We just need the 88% retracement. That is our price entry level, and with default targets positioned between, as always, the 38 and the golden ratio. 38, 50% retracement, and the golden ratio as potential support levels. So we expect a minimum 38% retracement, 50% retracement, or the golden ratio, or eventually the three of them. So the market will take some time to fill those criteria or to fill those targets if that is the objective. But the bat pattern will be printed at specific, if you need a specific price, 2066. It's a 88% retracements. So from there it will form we will forge a pattern. I'm not saying the price will not react from here. Eventually the price will react from here. Okay, using this as potential resistance, or starting to develop from here a descending structure. But at this point the market has failed to nail, at least to nail the completion point. I can assume this as a behavior, one entire process, very similar to the BAT pattern, which requires a 38% retracement from those levels, and we just need to make a small adjustment to the Fibonacci level, a few points below. So, and from these highs, we can expect a 38% retracement without feeling that specific or particular detail trading at the 88% retracement, but the pattern will be forged at these levels. Okay, again, the bearish BAT pattern on dollar versus Mexican peso, which can act from here. Dollar versus NOK. As you can see, another one that has been printed at 113 extension is an alternate BAT pattern, which requires the 38% retracement. As always, the 38% retracement as a minimum expectation adjusted to the new highs. The market has extended a few points above those highs, so we need to make that adjustment. At this point, we have targets for the alt BAT pattern positioned at 8.42. 8.4244. So this is the first target for the pattern. The second target is positioned at the golden ratio. It's synced with this previous structure support and resistance level, which can act again as potential support from there. So it's this support, this resistance, previous support, previous resistance. It's a kind of a pivot zone, which I will not be surprised again to see dollar versus NOK retesting those levels. Obviously, the market can fail and print new highs, but the pattern is printed here and not above. So that said, the pattern is completed. We make some assumptions and we expect the market to reach at least the 38% retracement position below this eventual ascending structure that I'm drawing here. Eventual structure. So this is dollar versus NOK. As you can see, I have a lot of dollar related pairs, expecting them to trade lower. Okay, dollar versus CAD. Dollar versus CAD has found support. It was a very interesting chart because I was expecting this sharp pattern at 161 extension. The market has failed to nail that Fibonacci level here, but it has produced an interesting price behavior, and then two tops above the previous one, a divergence, has forced the price to break, to print a deeper pullback into the 200 moving average as support, as we can see here. From here, I was expecting, okay, the default target for this bearish momentum or this bearish pattern, it's positioned at 38% retracement, 131.1440, and I was expecting that at least that minimum to be achieved. So, but the market has, as soon as I published the chart saying, okay, I'm expecting at least a minimum of 38% retracement, the market has decided to bounce above the 200 moving average, extremely strong, and well, at this point, I need to wait. I need to wait for to try to understand what is the objective behind CAD for at this moment. But it's still the possibility to form this bullish sharp pattern below, unless or if the price breaks the previous structure resistance, it will invalidate that possibility. But until there, we still holding, and this still the possibility to trade at 130.72 to form the shark at 168 extension, previous structure support level. It's also interesting level to pay attention with CAD at this moment. Not confident about the price action at this moment. Too too noisy at this moment, and I prefer to stay away, and I prefer to wait for other market conditions for CAD, and because it's also related to oil, and well, oil, as I mentioned before, there's an expectation for oil to trade higher. So that said, it may have some impact on CAD also. Dollar versus CHF is also one of the trades that I'm holding. From actually, I sold that market above the completion point once I detected those highs and the price breaking. So I have entered this trade a few points above the completion point, which has offered me a better or a friendly, even better, or even friendly risk reward than than entering the pattern at the completion point. So I've tried to engage the market a few points above, actually very, very close to those highs. I almost nailed that market, trying a short above the completion point, which is not usual for me. Usually I use the default levels. If the market starts to trade above those default levels, I tend to ignore those patterns because usually they don't work. At least the probabilities to achieve targets, if the ratios are not the right ones, will decrease. So at this time the market is very, very close to trade the 38% retracement. This is a daily time frame chart. It as we can see, the market has almost nailed the 38% retracement, my first target, and then it started to enter. It has entered in the consolidation period, a sideways process, which has forced me to break even my position and to partitioning my position as soon as I saw the market bouncing above my default target. I decided to break even my trade, partitioning my trade. I'm holding just half of my initial position size at this moment, but my expectation is the same, the minimum 38% retracement, and eventually push it a little bit lower, searching for the 200 moving average, and eventually the golden ratio. So in terms of momentum, as we can see here, there's still bearish momentum both on MACD and RSI. I use both because I like to search for confluence between both the indicators when searching for divergence on price. So if I'm searching for bearish divergence, I need to identify that bearish divergence on both the indicators. If if one of them is not synced with the price, so let's imagine I have bearish divergence on RSI, but MACD is not showing me that same divergence, eventually it will not work so as expected. So I need to search for specific criteria, and one of the criteria that I like to search for when the price approaches the completion point for those patterns, I need confluence between the MACD and RSI in terms of momentum, and in terms of RSI and in terms of divergence between those tops. So at this point we have divergence between the tops, and we have divergence also on MACD and converging with RSI. Both the indicators are showing us that divergence at these completion points between those two tops, which has reinforced my idea to short that market. So at this moment the market is now moving sideways, as I said before, so I'm just waiting for the breakout of this structure. Eventually it will happen or not. I'm not here to present you with certainties, but because the market can fail us, if the market fails, what can the market print us later? So a bad pattern position at 88% retracement is the next pressure zone where I can see. Let me try to extend this pattern here. The bad pattern at 88% retracement is the next bearish pattern to wait for. So if the market decides to reject to trade below this trend line where the market tends to go. So retesting the highs is one expectation. So if the market fails to break below, that's retest the previous structure resistance. If the market breaks the resistance above it, will trade higher. If the market rejects it, trade lower. So based on those criteria and based on those Fibonacci ratios inside this process, inside this period, I can imagine the bearish pattern, the bearish bat pattern at 88% retracement, if or not a breakout and a trend continuation, or let's say giving sequence to my bearish pattern, I will remain inside that. So at least for now. Aussie, Australian dollar versus New Zealand. I was expecting the creation of the formation for this cipher pattern from above, once I identify this edge and shoulder formation on a daily time frame. Once I identify this and I identify the projection, I have also said to people, okay, eventually the price will print the 78% retracement to print the cipher pattern based on the specific criteria and Fibonacci ratios we have. We can start to make some assumptions. So the market will retest the structure. The market will retest this structure trend line approaching from below as potential support line or support structure trend line. The market is now retesting that structure. There's room below on a weekly time frame. There's room below Aussie for Aussie to trade even lower. If the market is, I'm not so sure if the market will offer me that opportunity at this moment. We have no divergence. We have no motive beside only the pattern in terms of Fibonacci ratios. We are trading above this structure trend line, which can act as potential support. But at this point, I'm not so confident about this or confident about this instrument, this pair specifically. I can see Aussie trading even lower, but well, I was expecting at least the forecast or the projection for the edge and shoulder to be filled. That will put the price below the completion point for the cipher pattern. As we can see here, the market has extended the 88% retracement, broken the 88% retracement and retesting the previous structure support. Obviously, breaking below will reinforce the idea to keep trading lower with Aussie versus New Zealand. The reason why I'm not so the reason why I don't like this instrument at this moment is exactly because of this New Zealand versus dollar, which has been trading higher, and well, as we can see here, the market has reached the 168 extension. So the market has printed me this shark pattern at 168 extension. The market has reacted well, 1, 2, 3 waves, corrective structure, ABC correction on a lower time frame, and then it started to rally again. So a very strong momentum, which at this point I prefer to wait for the 224 extension. Let's use a Fibonacci retracement here. Let's try to identify potential confluence between that level and other Fibonacci retracement levels. As we can see, we have the golden ratio positioned at confluence with that Fibonacci extension level. And well, that said, I will not be surprised to see that level acting as potential resistance, which may produce some relief or some deeper pullback. And again, the shark will print me always. Every time I see a shark pattern, I think on a 5-0 sequence, or at least a 50% retracement from all this bullish momentum. So that will put the price at these levels at the 50% retracement, and then later again. So we have the 5-0 sequence, and we can project above that level a new swing, that will put the price retesting those highs. Minimum expectation, retesting the previous resistance. Above we will follow, but minimum expectations 50% retracement if the pattern gets completed, 50% retracement, which should be followed by a bullish momentum. Again, minimum expectations, trading the resistance, trading the Fibonacci levels from if the price achieves the 50% retracement, trading the Fibonacci retracement levels or even higher. Okay, at this moment we need to wait, because New Zealand versus dollar is trading strongly heavy at this moment. So Aussie, and we are almost finishing. Aussie, let's go into a daily time frame. Aussie, it has printed the 224 extension shark pattern. As we can see here, the market has, very similar to other pairs, has produced a three-wave structure, a corrective structure, and it's now printing a new high, and it's now violating again this previous structure, the 224 extension, as previous structure resistance, and it's now trading below that level. Failed to test the 200 moving average. The market has failed to achieve that media, well, at this moment it's still the possibility to print these patterns above, between the 161 to 224 extension. We have here the golden ratio positioned above at 7709, 74,500, the 38% retracement. So I will not be surprised to see Aussie keep trading higher, reaching those levels eventually, and for there, you already know it's always the same process. It's a 5-0 sequence that we expect, the 50% retracement as a minimum expectation. Let's use a 38 because it's synced with previous structure resistance. So first expectation, retest the resistance at 38% retracement, and then if they decide to achieve those default 50% retracement pullback, which should produce again a bullish opportunity to trade long with Aussie. But for that to happen, again, we need to wait for the validation of the pattern, the completion point, validate that opportunity to sell the market from here. So this is also previous structure support and resistance levels, as you can see, printed previously. A zone synced with a pivot zone, so I will not be surprised to see that same zone acting again as potential resistance and a fall from those levels. And almost finishing, just missing euro versus dollar and cable, because actually this video is already with 2 hours length. Well, and at this point we have euro versus dollar, very similar with DAX, very similar with S&P. This is an inverted heads and shoulder formation, and obviously this is inverted with dollar index, so the same way we expect dollar index to trade lower, breaking that same structure, we expect euro dollar to trade higher, breaking this structure. So if that happens, we have the default projection above at 116.75. so this is the default projection for this heads and shoulder printed below, which requires the broken neck. So we need the price to break this previous structure resistance as a neck zone, and we need the price to trade above it and to trade above it. But this is the default projection. From the default projection, we have also the default shark pattern at 161 extension, which is actually also a Fibonacci extension reversal or potential reversal extension zone. So it's synced with the 78% retracement from all this swing, this bearish swing. It's synced with the 38% retracement from all these bearish momentum. Okay, all this bearish momentum, the 38% retracement, it's positioned here. It's also the completion point for the shark. So we have multiple confluence between, actually there's something, okay, we have multiple confluence between a retracement at 78% retracement, the 38% retracement from this bearish major momentum, and the 160 extension, the completion point for the shark pattern. Obviously we have the 200 moving average approaching from above, which may act and reinforce that idea to short the market here to try to print some relief. Again, the shark pattern will trade the 50% retracement, which will offer us a new, or which can offer us or may offer us a new opportunity to buy this market if that happens. Okay, I can see euro dollar trading, searching for the 200 moving average, some consolidation period here, eventually some triangles or some flags or some bearish structures may be forged here or not. I like those touch and runs situations, so the market feels a pattern and starts to bounce from those levels, start to fall from those levels. So my expectations for euro versus dollar is to see euro dollar trading at 38% retracement, or at least the 160.18 to form this pattern at 116.75. So this is my cluster box for euro versus dollar. Obviously it may fail, trading lower, breaking support, and if that happens it will invalidate that possibility, because this is only a probability to happen. There's nothing printed at this moment, so we need to wait to validate your patterns, measure your risk, measure your targets, measure your risk, and try to create a friendly risk reward opportunity to trade the markets. And finishing with cable, with all these Brexit events and the politics all trying to find a solution to the problem that seems has no hand at sight, and well, at this point, big consolidation period, big correction structure, and I have only two things to say to you based on this. The market will trade higher or lower this structure, below or above this structure. There's only two options: to break below or to break above. I don't want to do anything beside the fact that I need to wait those pattern completion points. So if the market decides to break below, I will wait for the bullish crab pattern. It may trade the 38% retracement, which will retest the previous structure support. Okay, 38% retracement, previous structure support. If the bullish crab pattern ends up being printed at this price at 124.008, it will retest the 38% retracement. It's the support we are now threatening. So if the price violates this support, and if the price finds support below that one, it tends to retest the previous structure. So the bullish crab will put the price retesting that structure at 38% retracement if printed above, trading above this 200 moving average and above this structure. I can see the bearish cipher retesting this descending structure trend line. I can see cable breaking this structure and trading even higher, but based on the most recent structure and the most recent Fibonacci ratios, I will not be surprised again to see this bearish cipher pattern at this trend line or around this trend line, retesting this 78% retracement to print this cipher pattern. Note that the market has already printed a new low below the previous one, so it requires a few adjustments, but still a valid cipher eventual. Actually, it always a valid cipher because it's not printed, but We are free to draw whatever you want inside your charts, but based on the Fibonacci ratios that we have, I will not be surprised to see a bounce, a break above this structure and the cipher pattern above. The same way I will not be surprised to see a breakout below this structure and a crab completion point below. So I have two patterns, one a bearish one at 130.83 and the bullish one at 144.008. So this is what I have for you, traders. I hope you enjoyed this video. Take notes because this is only educational content. If you have some issues to clarify, please try to contact me. You have my Twitter, you have my Facebook, and you have my email address on my website, which is tradingjazzfx.com. You just need to go there, search for my contacts, and try to get in contact with me if you have some things to clarify based on what I've shown you here. Note that some of those patterns will never work, some will never be printed, some of them will never be printed. Some of them will be printed and will not work. Okay, we need to face those patterns as failed harmonic patterns. They fail also. And some of them will work, as I showed you before. And we have here a recent example. This one was shared by me among my communities. This was a bullish BAT pattern at 88% retracement engaged, and look what the price has offered us. So stay tuned. Thank you for being here. Thank you for following, and I hope you enjoyed the video. And I will try to give you or to provide you or to share with you more updates based on these price structures. Have a nice week. All the best for you and safe trades, everyone.